Oh, hi, Suhail.
Hi Zach, how you doing? You okay?
Yeah, good. You?
Excellent, not too bad, thank you very much.
Okay, I just thought I'd start off by asking you to introduce yourself.
My name is Suhail. I'm the founder and principal of a company called Brighter Beauty Group. And Brighter Beauty Group is a company which goes and acquires hair salons and beauty salons across the country. Currently, we're focusing on hair salons specifically, but if there are some very good beauty salons there with the kind of criteria that we're looking for, then that's something that we are always willing to do. So we acquire businesses, bring them into the group that we have. Currently, we have three salons, and we take it from there. Yeah, each acquisition is very, very important to us to ensure that it continues its legacy, and we want to move it forward. So that's simple for myself. I have a team of maybe 5 or 6 individuals, in fact, 7 individuals now, who work on our senior team with various expertise within the hair industry, the beauty industry, also a fantastic accounting team and finance team, which can look after the businesses. So it's a very quick summary of who we are and what we do. And myself, I'm the founder. I've brought it all together.
Okay, and you've got lots of extensive experience prior to setting up the Brighter Beauty Group. So, you've been involved in sales and marketing and all sorts of other kind of occupations that have helped you to get where you are as of your team. So it's good all-rounded experienced team you've got there, yeah?
Yeah, I mean, as they say, every experience in life brings you to where you are today, isn't it? So I would never say that any experience I've had has been wasted. Maybe a few incidents you think, oh, why did I do that? But other than that, that's everyone has that in their life. But
Sure.
generally speaking, our team, absolutely fantastic. The average age of the people on my team is in the 60s. So these are well-seasoned, experienced individuals who know the industry very well and are very, very good and competent and proven in what they do, which is absolutely important for me. And that's why I brought them together on the team.
Great. I just wanted to talk to you about acquiring businesses, basically, because from my experience, business owners tend to have some type of ego in terms of their business. So they have a completely different view of their business as, say, somebody like yourself that's looking to acquire. So I wanted to try and get you to talk a bit about what you're looking for in a business. And I wanted to start off by just getting some general comments from you on the industry. When you start looking at businesses, how have you found other agents? How have you found the kind of general response to things? What are your kind of issues that you have that you are finding difficult in the industry when you're looking for potential businesses?
Well, let me start off with something. This is really important, and you kind of touched on it in your question. There's multiple parts to your question, by the way. The first thing is that we understand that most of the time when we're looking at the business to purchase, that business owner has been the founder or they've been part of that business for the last 20 years. And that's their baby, and that's their love, and that's what they've worked all their lives in. As they say, you spend majority of the time at your workplace and at your business. So
Yes.
we understand that, and we have that at the forefront of our acquisition strategy. That unless there is something really, really, fundamentally wrong with that particular business, we want to continue the legacy of that business, and we never change the name of the business unless there's a specific need to. Let's say, for example, the business owner said that, oh, this is my, I don't know, my grandmother's name, and I don't want you to use it, for example. Then we'll say, okay, no problem. Let's look at rebranding it. But otherwise, we want to continue with that. And many business owners, for example, we've acquired a couple of businesses and looked at some businesses which we're close to acquiring, and they do have their personal names on the business. And we've just asked them, are we able to keep that on there? And they said, yes, that's fine. So we want to keep the businesses as they are and move the legacies forward. So we understand that business owners, they have this ego attached to their business, but that's natural. What we do look at is we do have a certain criteria, and some businesses would meet that criteria and some would simply not. So for example, a turnover criteria that we have, this is not the time and place to mention what that number is, but we have a turnover criteria, we have a team size criteria, we have a criteria of how some of the operations are run, and also, for example, that team, it needs to be a certain size. Why? Because if it's so dependent on the owner, unfortunately, it's unacquirable. It's just not something that someone will buy. And we're the same, we won't buy that business from you. But if it's got a certain team size, and what I would say is that anyone who's watching this video, this interview, if you can work on one thing and start stepping out from, especially customer service, so servicing customers, start stepping out from that role and step a little bit back, then that business itself becomes acquirable. And for me, looking from the outside in, I'm thinking, okay, that's something that we can move forward on. That's something that has potential to get to a certain point in completion. Ultimately, when you're selling a business, when we're buying a business, the only thing that both parties want is to get it to completion, and that means to the sale of the business. So you want to sell the business, we want to buy the business, but it has to meet that certain criteria. And the number one thing is to remove yourself from the servicing of customers as much as possible. So, and I understand the ego part of it, but the other thing is that what sellers need to understand is that they need to make their business a sellable business. Just like a product or a service needs to be a sellable product or a sellable service, your business essentially is a product, and that needs to be sellable too.
Yeah, that I totally agree with that. I mean, we have this value builder system where when we take on a business, we look at the 8 key drivers to value, and as well as the financials. What we also have found is that to make a business saleable, they must score highly on the driver relating to what their day-to-day input into the business. So I think it's a very good point, because you're investing in the future of the business, aren't you? So what you're looking at is how it's going to look when the owner's not there, and if he or she plays a key role, well, as you say, it's not saleable.
Yeah, exactly. Well, to be honest, I mean, if, for example, the owner's willing to stay on for 3, 4, 5 years as a and we always ensure that the owner is in a self-employed position, then that's something. But there needs to be a commitment. There needs to be a contract there, and the seller would need to commit to that. However, yeah, you're right. To deliver value, you need to make sure that the owner is not delivering those services, because it's just too risky for a buyer.
When you said at the beginning of the interview that you would advise a business owner, are you actually finding that in the marketplace that there's not a realistic expectation generally, either in terms of value or in terms of these sorts of issues actually being discussed up front with owners? Are you finding that?
Yeah.
Generally,
I mean, that's a big problem with other business brokers. They are completely unrealistic as to what the value of the business is. And they have, in fact, I've seen almost fraudulent valuations. Fraudulent, completely fraudulent. I'm not even saying inaccurate. I'm saying fraudulent valuations being given to business owners. And it's completely, I mean, I would love to be in the position where we're Apple and we're buying businesses of those $1 billion pound sizes, but we're not there. We're in the small business market, small to medium sized business market, and the small to medium sized business market, there's a certain value cap that you have, unfortunately, and that's what it is. So whatever that may be, we look at obviously the last 3 to 5 year financials, and it's based on those numbers while taking out and putting in. So for example, one thing we find a lot of business owners, they are paying things from their personal accounts and not running it through the business. They need to be moved into the business. Okay. And there's certain things that they're paying from for their personal purposes from the business, and they need to be moved out of the business. And either way, that moves the valuation up and down, sometimes in the business owner's favor and sometimes not in the business owner's favor, because the profitability has now been reduced because of that.
Yeah.
And it's all based on your turnover and profitability. And again, there's many factors. You said 8 key drivers of value, and there are multiple drivers of value. But having a realistic expectation is really, really important of what can be achieved. And also, which is extremely important, because with any investment, and don't forget, from an acquirer's perspective, it's an investment. Any investment is a risk. So there's a risk valuation that needs to be made too. So the structure of a deal is really important for us, and not just us. Any acquirer who is generally buying a business with less than 10 million pounds revenue, there's a higher risk. So if you're a business owner and your business has more than 10 million pounds of revenue, then the risk starts getting lower. But if your business has got less than 10 million pounds of revenue, the risk is always higher. and therefore the structure of the deal is really important to ensure that risk is mitigated. And also, as an acquirer, it shows me that you have confidence in your own business too.
Yeah.
Because
So,
if you have confidence in your business, then you'll be willing to have a deal structure which works for both parties, both the acquirer and both the seller too.
yeah, because and that's a very key point, actually, the structure of the deal. Because again, we have a something called a personal readiness to exit score, which is an online questionnaire, and it makes them aware of the potential types of deals that they have if they go to market, and there needs to be a clear understanding before they go to market of what to expect. I mean, I found that generally clients that have used other agents, they've had an over expectation of their business, an over expectation of how easy it might be to sell, no idea of a structure of a deal, no idea of a proper preparation towards getting that business on the market, and no documentation to back up a value. So these is frustrations that you've all kind of discussed with me.
Yeah. And that's why I was saying completely fraudulent valuations, because none of these things have been looked at.
Yeah.
How can you? I remember I spoke to a business broker, and he gave me a valuation of a business, and I said, "Have you seen the financials of the business?" He said, "No, I just spoke to the owner."
Wow.
I could not believe. I was actually dumbfounded, and for about 5 seconds, I was silent on the phone because I didn't know what to say.
Wow.
So, yeah, exactly. So unfortunately, that's the case. But coming back, at the end of the day, we want to be practical with every single business owner.
Yeah.
We are building a group, a certain size of salons, salon group that we want to get to. And to do that, we want to make sure that we're fair for us. So our risk is mitigated, but also fair for the owners too. So we want to be as much as possible to a win-win situation. And I always like to think about this. And Zach, I've actually never mentioned this to you, but I always want to, meet with the business owners via Zoom initially, of course, and also at the premises, and almost sit at the same side of the table and say, okay, let's look at this deal and let's see how we can work together to get something which is agreeable. And, there'll be certain things which are important for us, and there'll be certain things which are important for you as a seller. And if we can, come to an agreement, which is a win-win for both of us, that's the best situation. Because we don't want this. Yeah, I tell you one thing, when lawyers get involved, and they have to get involved, when lawyers get involved, you get bogged down in the words of the details of the sentences, and it's just so, and this is almost like a pre-warning to anyone who's watching this. You get so bogged down in the wording of something that you almost forget the fabric of the deal.
Yeah, you lose the commercial view on the business, which is actually to get it over the line.
Yeah.
And inflated legal costs, of course.
Oh yeah, tell me about it. So unfortunately, we all fall victim of that. I call it a necessary evil. All of these professional fees. So they make good money, and they obviously spend a lot of time developing their law firms.
One of the ways, I mean, obviously, this is our fourth deal we're putting together, so we've worked together quite extensively, and obviously, I try and address all those issues up front. So generally, I understand, like you, the parameters of evaluation, and I always look at the business from the view of an acquirer, and just make sure that we have something that stacks up when we present it to you. Have you found that to be the case?
Oh yeah. I would say that Zach, and I'm not just saying this because we're on the Zoom together. Zach is one of the most practical business brokers on the market. So we've dealt with all of the business brokers that deal in the industry of the hair and beauty industry, and there are some good ones and there are some very, very bad ones. And Zach is definitely on the very, very good side, I would say. So if you want a deal which is practical, something that can be taken to completion, then Zach is, he's a person.
Yeah, because there is actually only a strict band within which a deal can be done, that suits a buyer and a seller, and it's about understanding where that area lies. I think, and I try and identify that, so everything kind of reflects that. So we're not spending hours on end arguing about valuations, etc., etc. It's a nitty-gritty we get down to almost immediately.
Yeah, and just from our perspective, we have a certain, or we have markers of valuations too. So, for example, if we know that the owner is heavily involved in the business, then we're only willing to pay X amount or X multiples. And then if the business is, the owner is not involved in the customer delivery or the delivery of services, cutting services or treatments, whatever it may be, especially color, then there's only a certain amount that we're willing to pay. And then, sorry, if they're not involved in that, then we're willing to pay maybe a little bit more because we know the risk is mitigated, or maybe even not a little bit more. We're willing to pay, more in favor of the sellers. And then if the seller is not involved in the day-to-day at all, then that's absolutely fantastic. That's the kind of deal we're looking for that will snap up very, very quickly.
Okay. And just going back to the valuations, when you found a really good business in the past, and it's with an agent who really hasn't sort of taken the time properly to do a valuation, and it's a business you may want to buy, but the valuation is so inflated. I mean, I guess frustratingly, there's no deal there because of the client's expectations.
I mean, to be perfectly honest, I receive deals in my inbox and by phone on a weekly basis, maybe about 10 deals a week, and I'm rejecting all 10 of them. And in a month, I may say, okay, this is one that we can move forward on. Send me the accounts. And this is another thing, unfortunately, this is something which is not just in the hair industry or the beauty industry. It's with every single small business, is that generally they're doing the accounts to minimize tax, and therefore profitability is low. And there's no deal there too. But we're rejecting more businesses than we accept purely because there's unrealistic valuations. If the valuation is too high, then there's just no deal there in the first place.
Yeah.
And no, I mean, private equity or a strategic acquirer, number one, they won't even purchase anything which is less than 5 million in total revenue, in total turnover. But number two, if they do, then they're really looking deep into the due diligence and everything, and most of the time they don't go ahead with the deals. So, well, they will pay higher. They will pay higher. That's what I was getting to. They will pay a higher valuation, but you have to be that certain size.
Yeah.
And if you are that certain size, to be perfectly honest, as of the date of the 1st of March 2023, which is today's date, we're not looking to acquire you now. Maybe in 2024 we're looking to acquire you.
Okay. And I just wanted to touch on a couple of other things as well. I mean, I now think that people like yourself, I call you armchair buyers, basically.
Armchair buyers, yeah.
What I actually mean by that is that, you need to have proper information in front of you, immediately, not having to kind of a very vague kind of description on the internet that you then have to proactively chase. In my view now, we have what's called an armchair buyer, and they need all the information in front of them to see the deal. So, for example, we do the company valuation. We even do a video. We also have an open sale in all situations. So when you buy that business, you already know the staff have been informed. So it makes the whole process a lot easier. So that's what I mean by an armchair buyer. And I think that's a big difference between the way we do things and the others, that you're going to be able to receive a sales memorandum from me, and you're going to be able to know almost immediately yes or no, which is where you want to be. Is that right?
There's two things I want to touch here. I want to mention the staff members first, because it's so important for both sellers and buyers too. As you know, in the hair and beauty industry, and any industry, unless you've got a online business which has a lot of systems in place, staff is the key. Without staff, there's no business. Okay. If you don't have staff behind the chairs cutting, if you don't have staff next to the beds, providing the services in the beauty industry, then there is no business, because you have to have staff to be able to provide the services. And it's really important for us that staff are comfortable. There's no way that staff members, one day they think they're owned by one, and the next day there's a new owner and they have no clue as to what happened, that they will feel comfortable in that situation. Even when staff know from a year before that the business is on sale, they are still uncomfortable. Yes. Yeah. I used to work for businesses when I was younger that were acquired or went through change of ownership, big businesses. The biggest business that I used to work for, that went through a merger actually was Orange Telecoms when they merged with, I think it was T-Mobile or something, and they turned to EE. Yeah. And that was even uneasy for such a big business. Such a big business. It was uneasy at that time. I can't remember, there was about 1,500 people that got fired. So we're all thinking, okay, are we going to get fired? Is our job safe? One thing I will say is that 100% of the time, everyone's jobs are safe when we acquire a business. Unless, for example, you as a seller are telling me that we need to get rid of that person. Yeah. Then I'll say, okay, let's get rid of them, because if you're telling me we need to get rid of them, then we'll get rid of them. Otherwise, no. Everyone's jobs are safe. We want to, in fact, we want to promote. Many times we promote from within. Yes. So the last deal that we done, we just promoted 2 people in the business, and they're getting a pay rise because of that. And yes, more responsibility, but they're getting a pay rise because of that too.
Okay, and
sorry, you mentioned the other thing, right? What was the other thing you mentioned?
About the way the stuff items are presented to you, the video.
Oh yeah, armchair value. Yeah, without a doubt. I mean, there's sometimes there's too much information, and sometimes there's so I learn a lot of my business acquisition skills from 2 very, very successful people, Warren Buffett and Charlie Munger. So these 2 guys, obviously, as we know, they're some of the biggest business owners in the world. In fact, they have the biggest private equity business acquisition company in the world. And Warren Buffett is, of course, one of the richest people in the world, and he has been for the last 3 decades. They do business really, really differently to private equity, but they're still way bigger than all of them. They want to understand the USP of the business, the unique selling point of the business. They want to understand that the business works, even if that seller is there or not. And they want to understand that all of the things are in place. So is the lease watertight, for example, in this industry is really important, yes? Is the lease watertight? Now, those guys are acquiring businesses in their billions, so they don't even have a problem of checking the leases, but we have to, because it's a much smaller business, and we have to ensure that that is in place. And many times, I would say, 8 times out of 10, there's work needs to be done on the lease. So we need to check certain information, and if that information is provided to us from day one, we can make a decision very, very quickly. So it doesn't waste anyone's time. Because if you're a seller, and let's say we've approached you and we said, okay, we want to buy your business, and then we have to spend the next 3 months just chasing after very basic information, you're thinking there's a deal on the line, and then after 3 months we say no, because after all of that information has been provided, we've just wasted 3 months of each other's time. Yeah. And it's more frustrating for the seller than it is for the buyer, because we've got other opportunities. But you as a seller, you've only got your one business that you need to sell. Yeah. So you just wasted 3 months. And if that information is provided up front, the lease information is provided up front, the accounts are provided up front, the tax returns even are provided, the business tax returns are provided up front, all of that information is provided up front, then within, I would say, maximum 2 to 3 weeks, we can make a decision whether we want to go ahead or not.
Brilliant. Because again, when I'm doing the valuation, I do a due diligence exercise on the business. So we've got a data room with staff contracts, supplier contracts, the whole thing, the accounts, VAT returns, etc. And as you say, very key to have all the information so you guys can very quickly get on with your job and decide whether you want to buy it or not.
Yeah, exactly. It's quick for us and it's quick for the seller as well. And the other thing, it saves on legal costs, because when the data room is already there, if that's just the links just provided to the lawyer can just go through that information, say, okay, we've got this, we've got this, we've got this, we've got this. Yeah, maybe we just need this. So instead of sending 100 emails and all those lawyer fees, they stack up. It's all there in that data room. They've got it there already, and maybe they just need 1 or 2 bits of information which are not there.
Yeah, and for you to have that information up front, it makes you more committed to the deal. So unless you have everything, and and inevitably, if you've got a client or you're dealing with somebody who hasn't done their due diligence and they've got to piecemeal bring that information onto the scene, it creates a time lag, doesn't it? You lose momentum. Yeah,
well, one thing I would advise any seller is that spend at least a month or 2 just looking at collating your documents. Spend that time collating those documents, and then once you've got that, then even when Zach, you say, okay, I need those documents, it's there already. You just need to maybe scan them and upload them, maybe.
Yeah.
And that just makes it a lot easier. But ideally, go digital. I'm a big believer of not wasting paper.
Absolutely.
Yeah.
Okay. Well, look, is there anything else you want to add? I mean, obviously you've mentioned about your company, you've mentioned your kind of long-term goals, you've mentioned the criteria that you use. You've also given us some very useful hints, and insights from, looking at the business from the eyes of an acquirer. Is there kind of any kind of sort of, closing comments you
Well, I'll mention some things.
Any potential people who want to sell their company?
Well, one of the benefits of joining a group like us is that, number one, we learn from any business that we acquire, all of the good points that that business has. But, vice versa, we have salons are very successful already, and we have very, very good points in there. And if your business, for example, can genuinely benefit very slowly and over time, those can be implemented and brought across. And to be perfectly honest, so handover is quite intensive. So just for a seller's perspective, there's a lot of work that happens before the deal, and there's a lot of work which happens immediately after the deal. After the deal, so it's really intensive. It's a bit stressful, to be honest. For the seller more so than us, it is a little bit stressful for us too. But that work, once it's done, then we want to implement anything very, very slowly and over a period of time, consulting with staff to see whether that's something that they are receptive to. We have like I mentioned about our team. So one of our key people is a person who goes up and down the country training salons outside of our executive team. So she's joined our executive team, and she is a fantastic part of that. She has so much experience. She's what I classify as a professional hairdresser and a professional trainer. And she will go and she'll do a full assessment of the salon and pick up all of the best points of the salon and write it down and say, we can benefit from this in our group. Yeah. Or maybe, for example, this one thing needs to be changed immediately, and this is the reason why. Me personally, because I know the sensitivities of staff members once a business has been acquired, I almost 90% of the time push back on that change. But if it's so necessary, then of course, then we will implement that change. But again, there's a reason for that. And we make that very, very clear. And normally, something's gone so wrong, and all of the staff members, including the owner, would accept it. That is actually the best thing to do for business.
Right.
So yeah, we have a good team. We focus on training. We like to implement systems of internal training from senior staff members within the business to junior staff members within the business. We have a good culture of external training too. So we like to get people into the businesses and outside of their businesses, outside of the salons, go out on external training courses too. So training is really important for us to make sure that staff feel valued and they can continuously progress in their careers as stylists, as beauticians. So that's really important to ensure that staff feel valued and they get the value from us too. And for those people, for example, if there's a manager in place already, an employed manager, then hopefully they've got a good structure. And if they don't, so far we've only ever improved the pay structures of managers, not made them worse ever. And to be honest, if it's something that they're currently getting and it's more than what we were paying our other managers, we're not going to tell them that they're getting a decrease in salary. We'll just keep it as it is, of course.
Right, yeah.
Because there's nothing worse than getting a pay decrease, right?
Yeah, absolutely.
Exactly.
Okay. Well, look, thank you very much, Suhail. It's been very, very enlightening. I hope people benefit from this. Thank you very much.
Yeah, you're welcome.